So what I thought I'd do is actually make a part two to the video that I made about COVID and all the stimulus that's happening now around the world. Governments around the world are all using these stimulus packages, although they're less like stimulus packages and more like topping up is sort of a better way to label these packages, because they're not really stimulating the economy, as I'll show in this video. I'll show in a different way. I'll show that all they're doing is they're sort of getting us to a better point than we would have been absent all of this cash going into the system, but it's not stimulus. It's not going to get us over and above some amazing point. And it's going to be quite a while before we get to where we were before. So now I'm going to use Coral Painter Essentials, and hopefully things are good. So just scroll down a bit. And so we have the government. Oops, that's not good. So we have the government. And just like before, it's also the public sector. And just like before, I won't break this up because it's not too important. Although you can imagine the government has fiscal policy, and you can also imagine public sector, you can imagine a central bank, and that's your monetary policy. Monetary. Ideally, these two are working hand in hand, which they are for most nations around the planet. And so we have, once again, we have the private sector. And like I was saying before, all money in the economy sums to zero between us. And this will become important. So we have zero, we have we have assets plus liabilities. And this is assets and liabilities owned by both. They sum to zero for all of us. So we have the private sector, and then we have private, and we have businesses. And then we have just regular people, just individuals. Specifically individuals who are not business owners, and which, surprise, surprise, is most of us. And so the question again is, why is most of the stimulus money coming down to businesses in the form of loans, grants, and that kind of thing? Why isn't it going to us? Especially, as I mentioned before, roughly 70% of GDP for most nations around the planet is consumer spending. And so why isn't the money coming to us? So we'll just scroll down again. So once again, we have the same scenario. We have, let's say, 5 units of businesses which were operating before, and we'll just say 5 units of individuals operating, but only, we'll just choose a red, only 1/5. I don't know, maybe it's a bit more, maybe it's a bit less, but anyway, we'll say about 1/5 of businesses are actually allowed to be open. The rest are not allowed to be open. And so we can cross them out, and only a certain amount of people, I don't know, let's just say, keep the numbers even, only this amount of people are actually allowed to go to work, and the rest aren't. The rest aren't employed. Obviously, we all have bills, so businesses have bills they have to pay out, and they got money which coming in, and that's obviously the same is true for us. And of course, money coming in for most people is just a job, but a lot of people have passive income. A lot of people have investments. You might have shares, all that kind of jazz, and this could be like rent. This could be mortgage. And then businesses, they make sales, whether that's physical products or services. And they also have their own rent to pay. They got to pay your employees, etc. And ideally, for most people, or ideally obviously for everyone, money comes in, money goes out, and then ideally there's a difference, and then you get your profit up here, and hopefully on an individual level we're all making profit. So the thing is, this is a cycle. There's the government is up here, G, and money just goes around. And the idea behind all that money is that it represents activity. With your job, you're going to your job, you're producing something, and you get something from that. Ideally, you're not a slave, and money's coming in, and that money you can use to pay for things. Obviously, you're renting your mortgage, but obviously there's all these other expenses things that you actually spend that you actually enjoy, and that all represents real resources, and that's the whole point of the money. And same with businesses. So we're using real resources, and we're just denominating it in dollars. But now comes the crisis. Now comes COVID-19, and that disrupts all this. But it disrupts it in a specific way. It's not analogous to the global financial crisis. So if we have the GFC here, oops, that should be a C. It's not analogous to that. In here, we're not allowed to work. It's not that you can't work. It's not that we're all disabled. It's not that businesses have suddenly run out of resources, have suddenly run out of money. The only reason businesses are running out of money is because people can't work at them. They can't produce things. So normally, we'll just start again. Normally, if we have one individual business, it's producing some sort of value. Whatever value that is, people derive some sort of value from it. Yes, like that. And because you produce that value, money comes in. And at some point, you'll have to spend money because you're using let's just say you're using value from something else. You're deriving value and you pay for it. Here you're producing value. Value goes out and you get cash. And part of this value, goods and services, there are resources. Resources that we're using up. And obviously this is the same is true on the individual level. And the point is, when this is shut down, it's not shut down due to any fundamental errors or any fundamental something that's gone wrong in the economy. It's just that people cannot go to work. They can't produce this value. So we cross out this. And so we also cross out the money that you would normally get. However, you still got bills to pay. The rent stays, all that other stuff. You're still in the same building and you're still in a shop front. You just have to imagine this is a shop front. You're still here, and so you still have to pay rent. Money's dried up, you can't pay your rent, and so you shut down. Or for the case of most businesses, you're mandated to shut down. And so the same is true of individuals. You're not allowed to go to work, so the money that would normally come in from you providing value doesn't, and then that means you also can't provide any value, and so you're just stuck at home. But this is mandated by the government. You're not actually allowed to go to work. And so the point behind all this money that's coming in from the government sector, and the point behind it going to businesses specifically, is that we want these businesses, we want them to stay afloat, but we sort of put them on ice, as I mentioned earlier. And so the government is feeding all this money to make sure they can still meet these obligations, because you still got to pay your rent and all that kind of stuff. And so money can still come in. Despite the fact that they're not providing any value right now, you can still pay your outgoings, you can still remain open, and only a small portion, so we can imagine a big fat check, and a little one for us. The idea is that when they lift the restrictions, because they're artificial, the restrictions we're placing on ourselves, people can go back to work. And so then, once you do go back to work, your money will return, you're providing value, and you can start paying all your outgoings and all that kind of stuff. The idea behind not paying people too much money, behind, let's say there's a 70-30 split, 70 to businesses, 30 to us, the idea behind that is, when we're quarantined, there's only a certain amount of money we can spend because only a certain amount of businesses are open. Obviously, we still have to pay rent and all that kind of stuff, but we can't go out and we can't enjoy a lot of things. But when this ends, we want businesses to be open. We want them to be able to be open on the first day the quarantine ends. However, if these businesses, if they close down, it could be a permanent thing. It could be that business closed down and it can't open in a week, a month. It might take a few months for a business to open back up. But in that time, we have all of this money. Let's say it's a 30-70 split. We have all this money. All this money is then chasing fewer businesses. Because in this scenario, we have a whole bunch of businesses which are open, a whole bunch of businesses which are being kept open. But in this scenario, when only a few dollars going out, there's only a few businesses that are open. And some of them might have shut down permanently. And it might take a while for the other businesses to reopen so we can go back to where we were previously, before COVID. And that's the point. is that this split would, yes, give us more money, but it might just cause inflation. You might get, let's say, $10,000, and that $10,000 right now can buy you a lot of things, sure. But when they open the floodgates and when everyone can go out, it might be that the nominal value of this stays the same, but the real value goes down if prices go up. We could just be bidding up the value of the services, the small amount of services which are now available, because we've allowed all these businesses to close. It also means that people cannot go to work. And that's the thing. We have to have these businesses, as I said, on ice so people can go back to work. And they can go back to work immediately. If the government on Friday says businesses are going to be allowed to be open on Monday, we need those businesses to be here. They have to be on ice, they have to be here, and then people can go back in and start working and producing value again. And start producing value, and we can start getting money flowing again. But when most of the money goes to individuals, the thing is, we're not producing anything. We have to go to a business to produce something. And so yes, this money feels good in your bank account now, let's say $10,000, maybe even $20,000 each. Doesn't matter what it is. The thing is, it's going to be chasing fewer goods and services. We're not producing anything with this $20,000. And so let's say it's a 70-30 split. I'm not saying it's necessarily right, but I think that's the thinking. I think that's the intuition behind why so much money is instead going to businesses. I'll draw it another way. So this is pre-COVID, and this is where spending and expenditures. And this is for all of us. This is government, private sector, this is public sector, and this is private sector. We're using a certain amount of resources, but then COVID comes down and pushes us down to here. We don't actually know what this bottom is because we haven't allowed it to reach the bottom, but we can imagine this is a Great Depression or this is even worse. Down here, with this so-called stimulus, but what I was mentioning is more like a topping up, which is a better way of visualizing it, is that we're simply bringing it up to maybe around here. It's obviously not great that we're at this point with our expenditures and with the payments and all the real resources, because real resources use has gone down as well. It's not great, but it's better than this theoretical bottom. And that's the idea. We don't want to get down to here. So all of this money, all of this cash brings us up to here. Now you might ask where this money is coming from. Well, the government can go deeper into debt now. Firstly, because interest rates are at historic lows. They're like 800-year lows. In some cases, 1 or 2%. Interest rates in Australia, I think like 0.25% or something, or it could even be zero. And you can borrow now, and ideally into the future. And so we're at this point. This is where stimulus has got us. Ideally into the future brings us back up to this point. And when we're at this point, and when real resource uses and everything has gone back up to here, then we can start paying off this stimulus. But if we were to allow it to get down to here, and who knows, it could even be even lower, it would take a lot longer. This arrow might be out to here. And this could even, who knows, this could be a decade. And in some cases, could even be decades. We might take 6 months, might take a year to get up to where we were and to pay it all off. Because these loans to the businesses, they're going to have to be paid back. And they're going to be paid back by the new activity of the businesses when people go back to work. Money will start flowing again. We'll get the circular flow of funds between the private sector and the public sector. And we can pay off the stimulus, and eventually we'll get back up to where we were before. This stimulus, this money, all this money that's going to businesses and obviously going to us in the private sector, that will be paid off by the renewed activity. Renewed activity. That will then be allowed because we're all going back to work, and hopefully it won't take too long for new businesses to open up, and so that's even more activity and more resources that are hopefully being efficiently allocated, all that kind of jazz, and there's new things we can enjoy and more money, and basically we can just get back to the path that we were on before. We're on a growth path, something like this. COVID comes along, bumps us down, but hopefully we can go to something like this and we can get back onto this path. Maybe it goes down to something like this, but if we don't allow, if we don't have any stimulus, we're on this growth path, maybe the drop is like this. And maybe it takes much, much, much longer to sort of get back onto this sort of trend path. I can't see that. We sort of have a trend path. It might take a long time to get to that trend path, or we might even get close to it and not reach it for a while, but we can close this gap. Basically, we have an output gap. And the point is, we have this output gap because we're not allowed to work. We have to let the virus pass, and we can get back to this point. The reason all this stimulus and all these loans and stuff, grants, won't be inflationary is because we're going to bring it back. And we're going to start using resources again, and we can start paying it back because there'll be new activity that was not allowed previously. And thank you for watching. Subscribe, rate, and share all the good stuff. Definitely helps my channel, and I'll see you guys next time.